Hello everyone, and I've been asked this question a lot. Is money management important? Well, yes it is. And in this video, I'm going to walk you through the concept of bet sizing and money management. And to do so, I'm going to use a bit of Excel sheet, a Microsoft Excel. I'll walk you through the concepts, I'll walk you through that Excel. And the best thing is I've not only created this Excel sheet for myself, but for you as well. All that you have to do is understand the concept, appreciate it, and in the description box, I've left a link. If you want this Excel sheet, just go through that link and I'll be happy to share this Excel sheet with you. Till then, money management it is for you coming up in this video. As always, trade well, trade wise. Thank you.
Starting off from where we left yesterday was this page where we spoke about these 5 questions, and we are in a position where the first 4 we can take care of to a lot of extent. It's the 5th question, that's the money management, that we will be working on right now. So if you know that Coal India is a prospective short or a federal bank is a prospective long, that I can probably look to trade that tomorrow, how much quantity based on my capital should I trade? This question is answered by money management. Now, it's very important that you have a log of your trades, some kind of an entry point, some kind of a historical data points which you have kept for all your trades, a log, a document. The good thing is I have created this for you. A better thing is I am going to give it to you. Not so good thing is you have to understand it with me. Okay? It's very simple, broken down in 4 parts. Basic Excel. There are few formula which I have created. You don't have to do that. I'll show you how to use this sheet. Very, very simple. All right. Objective of this sheet is it's going to help you not to overtrade, neither to undertrade. Fine. So let's start. Step number 1. First table, portfolio stats, portfolio statistics or portfolio parameters, whatever. Now trading is like any other business. When you start a business, you need certain type of capital. So when you start your trading, you also will require certain type of capital. I get this question asked multiple times. In fact, yesterday night only someone dropped me an email. I would like to show you the email if I can later, where he has asked me how much capital should I have to start. Okay. Now, if you are trading or investing in the cash market, not speculating in the derivatives market, you can start with any amount. You can start with any amount because a State Bank or an ICICI Bank is available for 200, 300 rupees. Correct? Is that fine? But then if you want to speculate and trade actively in the derivative segment, in the future segment, then I would suggest that you should have at least a lakh or 2 for intraday and close to 4 to 5 for positional. If you're doing futures market trades and you want to do it only intraday, no positional, then 1 or 2 lakhs will suffice, because your broker will give you 15 to 25 times of the margin that you've kept with them. Yes, Upstocks gives around 20 times. So if you keep 1 lakh rupee, Upstocks will allow you to trade for a value of 20 lakh rupees intraday. So with a 1 or 2 lakhs, fine. 1 lot, 2 lots here and there, you'll manage. Not a problem. If you want to take the future lots back home for a day, 2 or 3 days, that is positional, then 1 lakh will not suffice. Because at that point, the margin system, the margin calculation is very, very different. I would say 4 to 5 lakhs is something that you fine. For this example, for this money management sheet, I have kept an assumption that your starting capital is 10 lakhs. Point number 1, starting capital 10 lakhs. WCS stands for worst case scenario, or in simple language, आपकी लग गई. ठीक है? Worst case scenario means when you start an endeavor, So when you start to trade with 10 lakhs and you start to make some losses, when do you realize, oops, I have to shut this, I have to do something else. ये अपने पल्ले नहीं पड़ने वाले. You understand what I'm saying? So I have taken 30% of I have taken 30% of B2, which is 10 lakhs. I've taken 30% because industry wise 20 to 30%, if you go to a proprietary trading desk and you trade on their behalf, say for example, I have a trading account and you want to trade on my account. You prove yourself that you're a very good trader and you want to trade on my account. I give you 10 lakh rupees, but then I'm not going to risk my entire 10 lakh rupees on you. I'm going to tell you that your worst case scenario or your maximum drawdown is generally 20, 25, 30%. मतलब अगर मैं आपको 10 लाख रुपए देता हूं, आप 2 लाख से ज्यादा फूक नहीं सकते. If you make a loss more than 2 lakhs or 2.5 or at max 3 lakhs, then bye bye. This is more or less the industry standard of the proprietary trading desks. Is that all right? I have taken on the higher side of that, I've taken 30%. Now this assumption, this 10 lakhs your dad has given you, ura do pura 10 lakhs, so you make it, rather than making 30%, you make it 100%. This 30% is not sacrosanct, ye fixed nahi hai. This depends on you. This 10 lakhs also depends on you. It can be 1 lakh, it can be 10 lakhs, it can be 5 lakhs, it can be 15 lakhs, it can be 1 crore. Similarly, this percentage of the capital is also up to you. If you have 10 lakhs, which you think that, okay, I'm going to take a bet on 10 lakhs. My entire risk is 100% of my capital. I don't mind. Then you change it to 100%. Is that fine? I have kept it as per the industry norms of 30%. Now comes a very important cell, risk per trade. This is the most important cell in this sheet. This you decide how much risk you are going to take on a trade. For example, let's take a quick detour and come to the second table called possible trades. Possible trades are those probabilistic trades that you're going to take tomorrow. We got Fed Bank and we got Coal India. All right. Federal Bank was long, Coal India was short. If we open the chart of Federal Bank and we look to enter at 82.20, so let's say 82.30 is my entry price, and the bars, so we will be using a stop loss of somewhere here, so let's say 79.85, so let's say 79.75. The moment you feed these data, stock, long, short, entry price and stop loss, automatically it will calculate the risk. Automatically it will calculate the risk. Okay. Now the question arises, how much quantity should you buy? This one. So you come to this point, risk per trade. It means if tomorrow you buy one share of Fed Bank at 82.3 and it comes down to 79.75, how much loss will you make? 2 rupees 55 paisa on one stock, one piece. This is the cell which defines how much risk you are going to take on one trade. Is it 5,000? Is it 50,000? Is it 20,000? How much? Again, a good starting point is 1% of your starting capital, 10 lakhs, which is 10,000. Your starting capital is 10 lakhs. 1% of 10 lakhs is 10,000. So one trade you take, and if it goes wrong, your stop loss is hit. How much loss will you take? 10,000. This you decide. If you think 10,000 is too high, you reduced 1% to 0.5% or 0.75. If you think 10,000 is too less, you increase 1% to 1.25 or 1.5 or 1.75. Never use more than 2 and never use more than 0.5. If you use 0.5, you will be risking too little. If you're risking more than 2, you will be risking a little on the higher side. A good starting point is 1% of my capital. Is that okay? Why this is so important? Try and understand. How much money have you decided to lose if everything goes bad? Worst case scenario? 3 lakhs. How much money you have decided to risk per trade? In rupee terms, 10,000. So if I divide 3 lakhs by 10,000, how much will I get? What does this 30 mean? 30 trades. And what does it mean? 30 trades means what?
Continuous loss you can make.
Beautiful. Vinith, right? This 30 means you have made 30 trades, one after the other. Each and every 30 trades have hit the stop loss. Is it possible? You will make some profits, break even, less risk, less loss. Something will happen. It cannot happen that 30 trades you have done and all the 30, one after the other, everyone is stopped out. Very, very difficult. If you manage to do so, you're exceptionally bad. If you have actually managed to do so, you are talented and you should not trade. You should do something else. Is that fine? Is that fine? Because when you have 100 trades, 50 trades, it's not that you cannot have. So if I share my experience when we used to backtest one after the other various different types of setups, it is generally the maximum number of trades going wrong is around 8 to 13, 14, 12. In my personal trades, when I used to trade those machines, around 8, 9 I've faced. One after the other, 8, 9 will go wrong. Also on the other side, almost 15, 16, 17 will also go right also. Is that okay? 30 is exceptionally high. So when you start with this back of your mind, boss, मेरे को 30 trade फूकने पड़ेंगे, I have to make. Are you comfortable now? Are you comfortable to take the trade on Coal India and Fed Bank? Because even if Fed Bank goes wrong, you have 29 trades, one after the other. Is that okay? If you change this 1% to 2%, this 30 comes down to 15. This is a little uneasy for someone who's starting. Let's say you've started trading and you have 5, 6 positions right now open. And tomorrow, khuda na khasta, market gaps down and all your 6 positions are stopped out. You'll get a setback. So to start off with, to begin, keep 1%, which over here comes down to 30. So you are comfortable. So all these risk parameters of 10,000, 3 lakhs, 30 trades, you can comfortably take the trade now. Fine. With this in mind, you do your homework. When you do your homework, you will every day, end of the day or during market hours, you will find some stocks. You will find what to do with them, long or short, depending on your strategy. You will know which is the price to enter and you'll definitely know which should be my stop loss. Automatically, the Excel sheet will calculate risk and it will give you the quantity. How is this quantity calculated? This quantity is calculated based on 10 lakhs is the total risk, 2.55 is the risk per one share. So divide it, you will get 3925. So you know if Fed Bank I'm going to buy tomorrow with these parameters, I should buy 3925. Now for someone who's using 5 lakhs, just change this, everything changes accordingly. Everything will change. If you're starting with 3 lakhs, everything will change accordingly. Fine? You don't have to calculate separately. Let's go back to 10 lakhs. Okay, so you start your business, you define your risk parameters, your total worst case scenario, your risk per trade, the first step. Second step, with your intelligence, understanding about the market, You scout now for looking for trading opportunities. Every day you scan, you find some new ideas, you put it down and you create this. So for Monday, I know tomorrow when the market opens, if Fed Bank goes above 82.3, I'm going to place an order to buy 3925 shares. Fine. If Coal India falls below 890, I'm going to short 1000 shares. Is all right? Now you have done your preparation. This is preparation. This is preparation. And now you come to the market and the opening bell 9:15 tomorrow the market opens. The market opens, it will do its own dance up and down till 3:30. Your Fed Bank can go above 82.3. The moment it goes, your long trade is triggered. You have bought. If Coal India falls below 890, your short trade is triggered. You have gone short. The moment your trade gets triggered, it becomes a part of open trades. The trades which are open, which you have taken. What goes there? The date, the stock, whether you have bought or sold, the entry price, this you have to feed manually, the quantity you'll get from here, initial stop loss, current stop loss, the trail stop loss, target 1 will come to this at the end, CMP you will feed, accordingly it will calculate whether you're making money or not. Is this table clear? Any doubts? So how will you do? What will you do? I'll show you. The easy way to do this is you come to a row, the first row on the top, and you insert one above. Fine. What do you do? The last one, you copy the whole thing and you paste it on top. The whole thing got pasted. Now you make the changes. Tomorrow is going to be your 12th of November. Fed Bank long 82.3. कितना quantity है? 3925. Initial stop loss 79.75. Let's say you've trailed the stop loss to 80. Target बाद में आते हैं इस पे. We'll come to target later. The live version is in front of you. Done. Let's say CMP, you bought at 82.3 and it has gone up a little bit, it has gone to 83. The moment you feed till here, these two columns, you leave it, you don't have to do anything. These are automatically calculated. This return column in rupees terms, you don't have to do it. It's a formula, just leave it as it is. So that's why whenever you do a new trade, you insert a row and copy paste so that the formula stays. आप उंगली करने मत जाइए. If you're good at Excel, definitely do it. You will understand. See, this is a very simple if formula. This is like plain vanilla ice cream. Okay? But if you find this to be an exotic thing in Excel, then आप उंगली मत कीजिए. Is that clear? So like this, depending on your preparation, your possible trades, you will have a table of open trades. If you have a table of open trades based on your entry and CMP, you will have either profit or loss here. Yes. If you sum up these profits and loss, if you add these profits and loss, will it give you open profit and loss? Simple. If you have 4-5 trades open, if you add up those 4-5 trades profit and loss, what is the total profit and loss? It is open P&L. अब ये हमेशा तो खुला हुआ रहेगा नहीं. Few you will exit either at a stop loss, trail stop loss, at the cost, better than the cost, much better than the cost. So you will book various different types of trades, profit, loss, big profit, big loss, etc., etc. Falana dikra. Correct? Those become a part of booked trades or closed trades. What do we have here in the closed trades? In the closed trades, we have the entry date. the exit date, the stock, did you do a long trade or a short trade, at what price did you enter the trade, how much quantity did you take, what was the initial stop loss when you took the trade, what was your exit price, what was your entry value, how much was the exit value, what was the absolute profit and loss. इस पे बाद में आते हैं. Again, depending on your performance, this numbers will be red and green, red and green, red and green. And if I sum them up, if I add them up, will I get something called booked P&L? Yes. End of certain number of trades, if I ask you how's your trading shaping up, you started with 10 lakhs. If you add 10 lakhs with open P&L and booked P&L, this should give you the number. Sorry. This. Clear? Yes. So your open P&L, you're up 45,000. Your booked P&L, you've done very good. You're up more than close to 2.5 lakhs. So your 10 lakhs have now come close to 12.9 lakhs. Is that a good performance or bad performance? It's a good performance. Let's turn it more realistic in your case. The realistic which you have faced. Let's turn Apollo Tyres 237 entry, exit price, let's make it 200. Let's make Reliance 890 to 800, and let's make 330 to 330. Now what I've done, I've purposely turned this negative, and now your 10 lakhs have come down to 9 lakhs, 9.1. This is not a good performance. Earlier one was a better performance. Question: when you are performing well, this is the good performance. Still, when you're going to take the next trade, how much risk will you take per trade? How much? 10,000. Now my question to you is, you started with 10 lakhs. You took 1% of 10 lakhs. And over a period of 2-3 months, you have grown that 10 lakhs to close to 13 lakhs. You are still taking 10 lakhs risk per trade. Is it a sensible thing? Should we continue this or should we change the 10 lakhs? Change to how much? This 10,000. Huh? Exactly, which you saw at the beginning, that this formula now will change to B7 is a part of current capital. This is your current capital. When we started, we took the risk as a function of starting capital, but after a quarter's time, depending on my performance, or a month's time, I change it to a function of current capital. So bottom line, am I now risking more or less? More. Should I risk more? Can I risk more? Of course I can risk more. Why? Because I have turned my 10 lakhs to close to 13 lakhs. I have made almost 3 lakhs from the market. I have some extra capital now. Can I increase my risk? Of course you can increase your risk. So this 10,000 comes close to 12,900. So this 12,900 will lead to a greater quantity here. आपका quantity यहाँ पे automatically reflect होगा. This quantity will automatically increase based on this. Now, if your performance is bad, this number will go down. So if you turn these trades to negative, you see that now your performance is negative and your risk per trade is less, your quantity will be less. It keeps you in the game. It keeps you in the game because when the going is bad, it is telling you not to risk more but risk less. When the going is good, it is telling you automatically to take more risks. So you don't keep anything discretionary. आप randomly अच्छा Fed Bank 80 रुपए हाँ 1000 ले लो. See, essentially this is how people trade. 500, 200, 100, 1000. You understand? It has to be very, very methodical, Each and every step has to be properly defined. Nothing should be whimsical. Why Fed Bank? Based on aim and shoot, long. What is the basis of the trade? We know. What is the basis you have taken 3,500? So if you place this order 3,510 to buy Fed Bank, I might ask you on basis of what did you decide upon 3,500? So you can tell a proper explanation why it is this. Is this clear? Online participants, so far, is this clear? All right, very good. Now let's come to a interesting part. The interesting part is that of the target. See, initial stop loss is clear with you. At the point of entry, the stop loss. Current stop loss is if you trail the stop loss, if you change the stop loss. How do you define the target? What should be the target? Now, there are various ways in which this target can be decided upon. With my experience, I've figured out that the best way to figure out to place a target will be in terms of money management. How? You know, there are talk shows like Coffee with Karan. What else is there? Or kya? David Letterman, and there are many such different types of talk shows, right? Essentially, in talk shows, what happens? There is a host and there is a guest, and both of them talk, discuss. Let's say you have been invited to a talk show where you are the guest and the host is the stock market, and the discussion is between you and the market. You figured out a trade to be taken tomorrow at 100 rupees. If the stock goes above 100, I will buy. And if I buy this, if I take this trade, I am going to put a stop loss at 97. Please understand, when you do these decision making, which stock to take? Fed Bank. Where to take this price? Where to put stop loss? What are these decisions? When you do these kind of decision making, subconsciously you are telling the market that I am going to take a bet of 3 rupees on my trade, on my chance, on my opportunity. I'm going to take an opportunity in the market. I'm going to take a chance with you. If I go wrong, then I'll give you 3 rupees. That's the talk that is happening between you and the market. You're telling the market, you're telling Fed Bank, listen, the way you have shaped up on the charts and the way indicators have panned out, if you go above 82.3, there is a chance that you might go higher. If I go right, I will do a little bit of dance on this chance and I'll make some money. This is trading. Fine. But to do this dance on the chance, you have to define a risk, which we define as a stop loss. So you tell Fed Bank or you tell the stock over here that I am going to take a chance, and if I go wrong, I will give you 3 rupees. I will give the market 3 rupees. Is that fine? Till this point, everything is in your hands. Everything. Whether you want to buy this stock or not, whether you want to buy at 100 or 101 or 99 is in your hand. Whether you want to put the stop loss at 97, 96, 95 is also your decision. The market is not telling you to decide what. But the moment it goes above 100 and you have bought, now things are not in your hands. Now it's in the hands of the market, of that stock. All that you have to do is protect your capital and keep a very close watch on the behavior of the price. Question: if this stock goes up as per your anticipation, and let's say it comes to 103, it comes at 103, what do you think will be the discussion between you and the stock market and that stock? What will the stock tell you, or what will you tell the stock? देखा, मैंने बोला था ना ऊपर जाओगे. What will the stock tell you? What will the stock tell you? मैं नीचे भी आ सकता हूँ, ठीक है, कोई रेणुका लक्ष्मी हो तो नीचे भी आ सकती हूँ हो जाएगा. What else can the stock tell you? At 103, if you're talking to the stock,
पार्टली प्रॉफिट बुक कर लूंगा.
स्टॉक आपसे क्या बात कर रहा है, मैं वो पूछ रहा हूँ. आप क्या करोगे, मुझे कोई लेना देना नहीं. आई एम इन अ ट्रेंड. ओके, गुड. I can come down. That was also good. What else?
Break even.
What is the stock telling you? You're thinking only from बहुत selfish हो आप लोग. You're always thinking from your perspective. मैं क्या करूँगा, मैं पता. I'm just telling. When you enter at 100, what did you tell the stock? We have done that. Now you have entered. Now it's gone to 103. At 103, what do you think will the stock market tell you? That's what I'm asking. हाँ, मैं कहीं भी जा सकती हूँ. Well, I think what the stock will tell you, listen, you took a chance with me and you decided to risk $3. Now see, I am giving you that $3. At 103, the stock is offering you 3 rupees, and that same is what you were taking a chance with that, the same 3 rupees. Now all that whatever you have said, break even, trail, stop loss. So the moment it gives you what you are willing to give, you are willing to give 3, now she is giving you 3. So now what you can do is you can break even, you can book partial profit, etc, etc, you can book full profit, etc, etc. Okay, so 103 should be your essentially first level, T1. See, agar aapka, just think from the structure of the trade. I'm entering at 100 with a risk of 3. If it goes to 101 and comes down to 97, I'm stopped out. But if it goes to 103, means the market is giving exactly what you are willing to give. Should you not take an action? You should definitely take an action. Means at 103, don't keep your stop loss to 97. Trail it. You have to take an action because now the market is giving exactly the same amount what you are giving. This same amount we will call X or R, whatever you call it. What is your R in the trade? 3. How much did you, if you book out at 103, if you book the entire profits at 103, you make 1 R. 1 R. If it goes to 106, you make 2 R. If it goes to 109, you make 3 R. 1 R, 2 R, 3 R, 5 R means 3 times of the risk that you took, you made from that trade. That is risk to reward. Clear? So the first level of targeting that you should keep is the first slab of risk. In this Fed Bank, what is the slab? 2.55. So your first level of watch out should be my entry price plus 2.55. 84.85, 84.85 should be your first alert. So when it comes to 84.85, I will take an action. I will take my stop loss to break even, or I will book partial, or I will book full, or I will book 80%, but I will take some action. I will not sit on my ass. That clear? At 84.85, when Fed Bank reaches, depending on your analysis of the chart, when you look at Fed Bank at 84.85, it might look a beautiful candle and you might get a hunch, "Arey boss, ye to 86 jayega." It can like zoom up, correct? Then what do? You wait, you break even. Agar 84.85 जाते जाते वो थक गया, let's say it has gone to 83, 83 and a half, and रो के 84 and a half तक जा रहा है. It is reaching the level, but with a lot of effort. Then would you be very, very optimistic? No. Then you would like to book some profits. So remember, don't keep any fixed rule. Act based on the behavior of the price. Don't keep any fixed rule. नहीं, T1 आएगा तो मैं break even कर दूंगा. No. Try and understand when T1 has arrived or when price have come close to your T1, how has it reached T1? Has it come comfortably, like full swing, or is it just dragging itself? Accordingly, take an action. Don't keep a fixed rule, or else what will happen? You book out, it goes further up. You put it to the, you trail the stop loss to break even, it comes down. You understand? So always play by the merit of the price behavior. Say for example, you know who is Yusuf Pathan? Who is he? Huh? No, Yusuf Pathan. I did not say Irfan Pathan. No, brother of some Pathan. No. Huh? Indian player. Okay. Yusuf Pathan is known for what kind? Like what kind? If you think of Yusuf Pathan, what will you say? Hard hitter. Has he made a very great career of himself? Now, who's Sachin Tendulkar? Huh? Who's Sachin Tendulkar? Cricketer again. If you have to tell your son that, okay, Sachin Tendulkar was like this, what will you say? Like you said, Yusuf Pathan was a hard hitter. What will you use for Sachin Tendulkar? Master class, correct? Between the two of them, whom do you think is a much qualified, better performer? But Sachin Tendulkar may not have hit the kind of big, huge sixes which Yusuf Pathan has hit. Correct? True. So when it comes to trading, you want to become a Yusuf Pathan or you want to become a Sachin? That I leave to you. That I leave to you. But remember one thing. A person like Sachin or a cricketer like him will always play by the merit of the ball. Not like Yusuf Pathan, whichever way the ball comes, he's going to swing, correct? Full length ball, swing, half length ball, swing, full toss, swing, 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 swing. You hit 6, you miss, out. Correct? You look at Sachin, he will play by the merit of the ball. If the 6 balls in an over comes in different ways, he will act in a different way. This is what you will need for consistency. So you, when the price comes to you, when you're with the price, emotional quotient is very, very high. Greed and fear, lot of things are happening inside you. Chemical locha ho raha hai aapke andar. Correct? You have to play by the merit of the price. Remember this. Do not keep a fixed rule. I'm telling you from hardcore experience. It's good to keep a rule, but not always a fixed rule. Because how do I know how will Fed Bank behave above 82.3? हो सकता है it goes to 87 like a zoom. हो ही सकता है. और हो सकता है कि 82.3 के बाद 83 जाके वो थक जाए. ये भी हो सकता है. Do I know beforehand? No. Then how can I fix the rule beforehand? Is that all right? Is the logic clear why I'm telling you all unconventional things? Whatever I'm telling you are all completely non-theoretical, which you will not find in the books. Because in the books it is written, do this, put a stop loss, etc., target, book some partial profit. The moment you try to do that, you will find it's not doable. Is that clear? So your T1 should essentially be 1 hour, should be one level of the risk that you're taken. Now I come to a very interesting part, this part. See, in the last 2 columns of this money management sheet, what I've done is I've put initial risk taken. This is the initial risk you had taken per trade. We decided 10,000 rupees. Now, let's say in this trade of Apollo Tire, your entry point was 237. Fine. Your initial stop loss was 227. Initial stop loss. So ideally, you should have exited at 227, not below that. If you had exited at 227, you decided to take a 10,000 rupee risk and you take a 10,000 rupee hit. So your RRR will be -1. Is that clear? जितना सोचा था R, उतना ही माइनस हो गया मेरा. 10,000 गया. अगर आपने कुछ शान पट्टी की, if you do some kind of, in Bombay बोलते हैं ना 2.5 शाना, 2.5, 1.5. 2.5 is what? 1.5 शाना, sorry. There's a term called 1.5 शाना. 1.5 शाना is 1.5. I have a term called 2.5 shana, which is 2.5. If you try to be very smart and you decide नहीं 227 में काटेंगे नहीं, and it falls further down, and आप उसको 207 में काटते हो, तो जो आपने रिस्क सोचा था 10,000 का लोगे, वो 30,000 का रिस्क हो गया, वो -3R हो गया. Is that fine? When you entered at 237, 247 would have been your T1. 247 would have been. Let's say you got 255. So you took a risk of 10,000. You took a risk of 10,000. You made 18,000. So 1.8. Is this calculation fine? This is essentially this divided by this. How much I made divided by how much risk I took. It's a conversation between you and the stock market. When I see this number, this number, this will tell everything about you. There's something called DNA, genetics. If I can read your, more or less I can make up what kind of a person, health wise, etc., etc., etc. Correct? This is your DNA as a trader. This number should be positive. So if it's -9, इसका मतलब ये हुआ, when I see a trade like this one, let's say Reliance trade होगा, -9. -9R or -9 means you decided to take a risk of 1 rupee, but you took a hit of 9 rupees. What the hell were you doing? Sleeping? You decided to take a risk of 10,000, you book a loss of 90,000. मतलब one trade, in one trade, you took a hit of 9 trades. You understand the logic? So this is horrible. Ideally, your minus figures, your minus numbers should not be greater than 1. Slippage ho sakta hai, 1.02, 1.05 is fine. It should not be greater than -1. Fine? On the upside, whatever it is. So when you add it up, now let's say to make it a little more realistic, say 880, you booked out at 890. Or let's say 900. You got 1 hour. So this number should be positive. It means that if I give you 1 rupee, you can make 30 paisa out of it. If it's 3, if I give you 1 rupee, you can make 3 rupees out of that 1 rupee. If it's -3, tum to gaye. Means you're a negative expectancy model. It's a negative expectancy model. You're a negative expectant trader. आपको पैसा देना मतलब पैसा खोना. Understand? This is expectancy. Simple. The risk I had taken, based on that risk, how much money I have made, ratio, sum it up. Your objective as a trader should be to have this number as big as positive as possible. It should be positive. As long as this is positive means you're making money, you're in the game. This is a very simple way of approaching money management. There are various complex concepts like optimal F, Sharpe, Sortino, and many others.